Hey everyone, welcome back to Mitchell Markets. Today we're going to look at what very few people pay attention to, and that's going to be options positioning. Today we're going to be talking about gamma, what it is, why professionals track it, why you see gamma walls on charts, and why delta alone doesn't explain intraday behavior. If you ever wonder why price pins, rallies stall for what seems to be no reason, or why a move suddenly accelerates out of nowhere, gamma is usually the hidden answer. Gamma is the rate of change of the delta. That's it. Not too complicated, pretty simple, but it's very misunderstood. Delta is telling you directional exposure. Gamma is telling you how fast that exposure changes. So delta is the steering wheel of the position. Gamma is how sensitive the steering wheel is at different speeds. So when gamma is very high, small price moves enforce lots of hedging activity from market makers and institutions. When gamma is low, price can move very freely without much resistance. And that's exactly why gamma matters more intraday than delta alone can by itself. To help visualize this core idea, this chart shows the classic shape of gamma and delta. Notice how delta is changing rapidly when gamma is elevated near the money. So now we're going to go over why delta alone is incomplete. A mistake a lot of people make is that they see large call delta and assume bullish. They see large put delta and assume bearish. But delta does not tell you behavior. Gamma does most of that. Delta is static. Gamma is more dynamic. A market can have massive delta exposure and still go nowhere if gamma positioning is suppressing the movement. That's why markets can often feel stuck or pinned, especially near large strikes. So, as you can see here on these two diagrams, on these two graphs, we have a low gamma environment where you're seeing large moves to the upside, some slight adjustments, and continuing higher, where we have a high gamma environment where you can see a wall kind of holding the price in a certain range, struggling to continue on the upside. So a high gamma environment, even with bullish sentiment, can cause walls, specific ranges, and even pinning on the upside. So why are we not using delta? Why gamma walls and not delta walls? Delta doesn't change behavior. Gamma is changing the behavior. Delta is telling you where the exposure exists, but gamma is telling you where action will be forced because of exposure. The gamma flip is one of the most important levels of the day if there is a specific gamma opportunity in the market. And this is where action switches from going from long gamma, suppressing volatility, to short gamma, amplifying volatility. Above it, dips are going to be getting bought, and below it, sell-offs are going to accelerate. So the specific section is where you're going to see some of the most volatile moves relating to puts, calls, options, all creating a gamma rotation point, which is similar to what just was happening in SPY when I was going over call and put walls. Once we'll call this as 690, where this call wall was. And once we were hitting this call wall a week or so ago, we kept breaking back down because of all of this gamma exposure. So we would be teetering off a little bit, then slowly sharp push up just to get to that call wall, and then we would get a breakdown. And it was like this for a few times before we actually were able to close above 690. And then you were able to see it have the opposite effect, where once it was above 690, it became support. So you would retrace back down to 690, support, blow up, support, blow up, which is creating this pinning effect because of all the gamma exposure at certain strike prices. And you can find option trackers online to find where there's more or less exposure. This isn't something where every strike is having an amplified effect on the underlying. This is specific points in the market that we're looking at. 690 was a massive open interest in the market. which was creating that pinning to the price. But if you look at 689, 687, 686, 88, if you look at all of these, it does not have that pinning effect based on gamma. So you have to be able to find where the open interest is first in order to trade on gamma pinning. And sometimes in the market, there isn't even enough open interest at any near strike to create any type of support or resistance level based on gamma alone. So it's just another tool that you have to keep in the shed in case the opportunity does arise. But that's why we're looking at the gamma and not the delta. So now, quickly before we close out the video, I'm going to be looking at a gamma exposure by specific strikes. And most of this you can almost ignore because a lot of times gamma exposure is so small that it's not going to influence your day-to-day trading or investing. But if we take a look here at the call wall currently set up at 7,000, and we actually approached 7,000, and just as I explained in my prior call wall and put wall video for SPY, we were hitting that 690 call wall and then breaking back down. And this is exactly what was happening on SPX. We were getting inflows up to the 7,000 range, and then we were breaking back on the downside because of this call wall currently up. And this is due to all the gamma exposure that we have. And we broke all the way back down to 6,940 after hitting that call wall. And between these two levels of 6,932 and 7,000, there's not a ton of gamma exposure that you're going to be worried about in your day-to-day trading. But this is something important to keep in mind when the opportunity arises, because if we do break too far to the downside, then that call wall is going to start to attract inflows circulating the price to rise closer to that 7,000 mark. And if we look here, we have a gamma flip that we are relatively close to. So there's two ways that we can play on this gamma flip. We can get a rejection and reapproach this 7,000 call wall, or we can flip short, creating a lot of volatility. So going into next week, this is an important video to make, not only to explain how stock moves are not just correlated to the price via EMAs, but a tricky thing going on behind the scenes of gamma. So guys, I know this was a little bit of a complicated video to make, and for me even to explain how all of this is working behind the scenes. But gamma is something important that you need to keep in your tool shed. Check on every now and then, mark out certain points on your trading charts, just so you are prepared when we do hit these call walls, put walls, gamma-induced volatility, as well as gamma flips in the market. Because even though other indicators, bullish or bearish, may be giving you interest signals, if you were to run into a gamma flip without knowing it, you could be caught on the wrong end. So hopefully this video dived in a little bit, helped everyone understand gamma a little bit more and how complex the market can be and what makes it so interesting. If you have any questions, comments, please leave them down below and let me know what you would like to know next as we continue to dive into the overwhelming option Greeks.